Hello, Maverick traders, and welcome out. This is Ankit from Maverick Currencies, and this is another edition of the Currency Room, where we'll be taking a look at this week's price action and talk about our upcoming week from February 19th to 24th. February has been a great month so far, so again, another good week so far. So let's take a look at what was the highlight for this week. And this week, we definitely had a kangaroo style markets where we're just getting a lot of back and forth. The equity markets, they are sort of rallying towards the end of this week, but they're still kind of ending lower. So they're continuing to weaken further, but still holding the support level that we have discussed. Markets are still not committing to a direction, and that's really where we are in the markets, just stuck in between those support and resistance range. It did break that 20-day moving average, but I think at this point, we just need to take a look at support and resistance levels. Now, the dollar had definitely a better continuation week this week. We talked about it last week, and we were right spot on the outlook. The dollar remained a good currency to be on the long side for the most part of this week. So the pullbacks, they're being bought out. The numbers that we had this week, let's take a look at the schedule and see what was the big numbers that we looked at this week. So as you can see that the numbers were actually starting with the US CPI. That was really the big focus going into this week. And so far, as you can see, the numbers were definitely more on the stronger side. I mean, the CPI right here. You can see there was a little bit of revision up on the year over year, 6.4 versus 6.2. So this, again, did create a lot of back and forth between the dollar and the equity markets, but eventually we noticed that the dollar strengthened, the equity markets weakened. So the numbers, if we really take a look at the numbers across other numbers that we also pay attention to, like the U.S. retail sales number, I mean, look at that number here, 2.3% versus 0.9. So again, the spending is strong. The people are spending money, and again, this is really the scenario where the Fed is a bit more on this forced to kind of raise rates to kind of diminish this behavior. I mean, the consumer stays strong, the sentiment is actually good, but at the same time, the inflation is not. It's actually revised up as well. So again, this really increased the bet that the Fed has to continue raising rates. And we actually had some comments just yesterday from one of the Fed chairs that there will be actually looking into raising rates by 50 basis points. Remember, the expectation was about 25. So from that front, the economic numbers, everything is supporting a dollar to be strong. So I think we just continue hunting in that direction. Outside of that, Australia, we had a terrible jobs report from Australia. Remember, we talked about how good the jobs numbers are coming out from other countries, like Canada had a stellar jobs number last week. We had a great jobs report from the U.S. So I was actually surprised to see the unemployment ticked higher while the employment change actually was negative. So that really had a big impact on the Australian dollar. We'll take a look at it, but this was definitely not the number you're looking for if you try to be on the bullish side. We also had PPI numbers out of the US. And again, same thing, same kind of scenario. All the inflation numbers, they're ticking up. Again, not a good sign. And that's really where the bets for the Fed to raise rates continues to be on the bullish side. Now, that's really where we have the bunch of that movement this week. Again, everything was really surrounded by the US CPI, the US dollar, and that's really what's affecting everything. So the gold did pull back as the dollar continued to strengthen. So we're noticing that the yields are strong, the dollar is strong, and the gold is pulling back. So there is a bit of that negative correlation there. Where I was surprised for this week was this crypto. I mean, crypto rallied across the board. So that was a big jump. I mean, we had the second biggest rally of 2023 of the cryptos this week. I think it was up about 10% across the board. So the Bitcoin, again, testing this 25K level. It seems like this week was definitely an off week comparing, what's happening with cryptos and rest of the markets. They were actually just doing their own thing. So overall, again, a good trading week. So let's take a look at last week's reviews and take a look at the percentage change. So if you look at the percentage change, you'll notice that, maybe there's not a whole lot happened. I mean, the S&P is only down 0.28%. But this is where, if you look at more on the intraday data, you'll notice that there was actually a lot more movement back and forth in the S&P 500. Now, World Stock Index almost closing flat, but again, there was a lot of back and forth. We are seeing a rally now towards the end of the today, as today is a big option expiration day. So we're seeing a bit of a rally in the second part of this day, but overall, it's closing at a point where we're sitting at a bit of an indecision, not really sure which way market wants to go next week. So we'll continue kind of looking at these price action, but again, always keep an eye on where's the next big move. Gold is down 1.21%. So again, we're getting a nice movement in the gold, especially, where the gold was, the last month. I think that the gold has almost erased most of that move that we've seen in the past few weeks. So we are seeing that negative correlation playing out very nicely. Now, the oil market's down as well. But again, oil, we have seen this trading this wide range where it's just going back and forth. And again, that's really the story for a lot of the asset classes, a lot of these currencies as well, that they're just stuck in a range. They're going back and forth, but they're not really trending as you would like it to be. Now, let's take a look at the percentage change for the cryptos. As you can see that the Bitcoin actually was the strongest, and followed by Ethereum. And we have Bitcoin Cash and the Litecoin being on a bit more on the lagging side. So seems like the money is going to these two main major currencies. So is cryptos ready to break out? I mean, at this point, if we just look at from chart perspective, I think they're now hitting that resistance. So until it really gives me a confirmation that cryptos are breaking out, I would be definitely a much more aggressive on that play. But where we are, we're just getting towards that resistance. So if you see prior resistance breaking out, I mean, that's where I think we get more direction. But if we haven't cleared that range out, we need that confirmation. Now, looking at the currency markets, you can see that this was also a pretty mixed week. So a couple of currencies that we got it perfectly right. We talked about yen, and yen is down 1.58%. So nice break in the yen basket. Another nice break that we had this week was the kiwi. So these two currencies are where we got the signal on the currency basket when they were breaking. Now, looking at the dollar, despite that, pullback that we are seeing today on a Friday, we're still closing out nicely for 0.77%. So good, decent move there in the dollar. But now looking at the Swiss franc, and this is where a little bit more off price action between in the European currencies. We saw some nice movements so far this week. Swiss franc, euro, and pound, euro being the leading one here. So remember, a week ago, euro looked terrible. But this is where I'm talking a lot about direction. In a range-bound condition, I mean, euro was just testing the support, and here we are, bouncing right back up. So that's a very typical range-bound price action, and something to keep in mind as you go to next week. Now, looking into this growth currency basket, I mean, look at a mixed bag here. I was definitely excited for CAD to have a continued sort of breakout as we broke out of that the range the last Friday on that stellar job support. It didn't really catch that traction, so we need to kind of put the CAD back into the sideways range until we see a further pickup in that activity there. Now, your Aussie and Kiwi, we definitely see that there's a relative strength and weakness between Aussie and Kiwi here. So Kiwi on the weaker side, Aussie a little bit on the better side. But again, one of the things that we've noticed with the Aussie is that it's not holding on to the gains. So a lot of rallies just kind of fizzling. So I think the Aussie has been a great short so far this week, just to short off those bounces. So that's really what we are seeing as far as the currencies goes. So let's do a quick current market analysis and see where we need to put our adjusted scores, where we are in the markets. So if you look at the equity markets here, I mean, equity markets are, I mean, as we would just look at the price action now, I think we're kind of almost reversing from the support line here. So this is a nice support line, and we are still below the 20-day moving average, but now we're getting a nice little reversal towards the end of the day today. So I think next week we'll probably continue to trade in this range until we break out above the resistance or the support. We want to be careful about that, how aggressive we want to play this. Right now, like I said, I'm still sort of mildly bearish on this. I'm not super aggressively playing that, and any sort of rallies are being a nice shorting opportunity. So for the equities, traded like it's a range-bound currency or a range-bound price action, but until it really makes that break. Now, let's take a look at the other areas, how everything else is moving. Now, taking a look at the World Stock Index, I mean, this still looks a little bit better. It's holding on to the level, but I mean, look at the last few days of price action. This has been very choppy, and I think that's just really what we're seeing. Starting off the year in January, I mean, we had a nice big rush here, but now if you look at the February, it's just really stalling here. So it's just really anybody's guess here if it's going to break out or it's going to break lower. But we just need confirmation before we commit to that direction. But meanwhile, what's the best way to trade this? Is sort of looking at the range bound price action, long at the support areas, short at the resistance, until or unless we get a breakout. Now, cryptos, I mean, take a look at the chart of cryptos here. And this is what I was talking about where, as we are towards the end of this week, we had a massive rally. But look where we are. We are right back into the resistance area. So today's movement, it still doesn't give us that confirmation that it actually wants to break or is willing to break out right now. So if you're trying to capture a further continuation, we need a confirmation on that break. And you can see that we pierce right here, and then we just jump right back here. So until we get the confirmation, I will be a little bit more skeptic of this. Again, that's how I'm looking at a lot of these movements. A little bit more skeptical on the breakout side, but there's definitely a nice range to trade for the foreseeable future here. So looking at the schedule next week, again, we have the RBNZ rate statement. I just want to point out that next week is a holiday shortened week. So the equity markets are closed on Monday, but you'll notice that the currency markets will be open. But whenever that happens, remember, there's going to be a lack of liquidity out there. So you don't really see all big movements, but you definitely see some sort of wider spreads or some sporadic moves that could happen. I usually like to skip these days because I need that liquidity out there in order to be convinced about certain moves that happen. So not really looking to be active on Monday, but starting on Tuesday, I mean, look at the Tuesday. It's a busy day. We have the Canadian CPI. Again, that will be the focus. We have the Kiwi rate statement. Again, they're looking to raise rates by 50 basis points. So that's something to pay attention to. And outside of that, we have manufacturing and services PMI out of the UK. And we have the services PMI out of the US. So Tuesday is a busy day. And I think and Wednesday is also an important day because we get the Fed, the FOMC meeting minutes. And based on those minutes, we'll probably be getting revised projections, and I think that will be an important one to watch, especially if you're trading the dollar. So let's skip Monday, but I think for the rest of the week, there'll be good trading opportunities. So this week outlook is that the equity is likely to stay in that range bound. I think that's where we are until we get a confirmation that markets are ready to break one way or the other. Let's just stick to the right strategy for these market conditions. Next week, like I said, we have the one central bank announcement, but a lot of economic reports to kind of pay attention to. So let's do a currency analysis and see what's really moving here, where we need to focus on as far as the momentum goes. So right now, I mean, take a look at the Bitcoin here. I mean, Bitcoin is actually broken above that resistance here. So the trend score has increased from a +1 to a +2. Just last week, we actually had to downgrade that the number here as we break below that support. So definitely a bit of a surprise there. But momentum is strong, and so is the velocity. So I think for further continuation, I will look for pullbacks to kind of buy into. But remember, Bitcoin is testing this psychological 25K area. So it found some support, as you can resistance right here at the 25K area. And if you're a bull on the Bitcoin, we need to get that broken above in order to kind of have another rally to the upside. Bitcoin, on the other hand, notice that it's on the lagging side. While Bitcoin is actually broken out, Bitcoin Cash hasn't really broken out. So this is where I'm giving a +1 and on a trend score. It's not as strong as the Bitcoin. So a little bit of that divergence there, but I prefer to kind of trade the Bitcoin. And Ethereum, as you can see, is right at the resistance as well. So at this point, Bitcoin actually looks better compared to Bitcoin Cash and Ethereum, as it gives a little bit more confirmation on the breakout. And like I said, this can easily reverse. So you have to be very careful when you're dealing with these ranges. Things can go back and forth until it really breaks out, and it's all about the timing whenever you get that. So confirmation is really the key to get that, when you see these breakouts happen on this, bigger time frames. Now, lastly, Litecoin, same thing. So right at the resistance, we did find a quick reversal off that resistance, and now we just kind of climb back up here. Again, not a confirmation for a breakout, but for a short term, momentum is just strong. So the cryptos, again, looks good. Let's take a look at currency market. And in the currency market, I really haven't made much change to the trend score. Most of the changes are happening on the velocity scores. But if you take a look at the trend score, we're still sitting at +1 on the US dollar. As you can see that, I talked about it last week, there's a lot of overhead resistance. So every time it runs into those resistance, it starts to kind of pull back. But remember, those pullbacks could be a nice buying opportunity. I mean, this has been basing here, and now it's continuing to kind of jump here, but it's not as extremely bullish where, we have a +2 or +3 score. The score is still a +1, so you just have to really play it as a mildly bullish. The right strategy for this is just to buy on a pullback. So you can see in the shorter term, velocity is pulling back. So whenever I see that, again, that's the time. If I have $1 long, maybe take some profits and then kind of look for that pullback to complete in order to jump back on. So the dollar, again, not much has changed. Don't really love the candlestick today, but again, that's just a one-day candlestick. We just have to see what happened next week. Now, Japanese yen was the one that really broke that support. I mean, we talk about this was a long month and a half, 2-month support, which just it actually broke below here. So right now it's sitting below that the break here, which is a good sign. If you're looking for a break and a continuation, this is a nice little break and holding pattern. If you look at the velocity score, it's kind of sideways here. So I still like yen on the downside. It's just a matter of when is the right time. But that's where you have to really pay attention to velocity. So when you get a good velocity score, maybe that's when the yen is on the run here. But again, if you look at back here, this was trading in this wide range. And upon that break, the range is really narrowed down. So at this point, we might go in this little sideways pattern here. But as long as it stays below the support here, it has a little further more downside to go. Now, let's talk about other currencies that are also range bound, but they're kind of moving sporadically. But look at the Swiss franc. I mean, Swiss franc has been also another currency that just don't have that much of a velocity or strong trend. It's just kind of moving back and forth within this range. So as soon as you can see, look at the patterns here. As soon as we tested the support here, we rallied. Now, as much as this is looks like an amazing long, but I do want to take a look at a short as we tested the resistance here. Again, I'm not convinced on any breakout pattern here. I'm more in the middle here, trying to trade between those ranges here. So what do you need to see for that reversals to happen? You need to see the velocity score start to weaken. So this is not all the right time. The velocity is still strong, but when the velocity weakens, I think that would be a time if you're looking for a short around this area. But again, I'm not really going in for a breakout. And it's the same thing with the euro. I mean, how many times in euro you can say, I like it long here, I like it long here, and each time it just reverses. So here we are getting a nice little rally here. I mean, look at that, how consistent this pattern is. It tested the support area, now it's right at the resistance area. So next week, again, I'll be looking to be selling in this area until or unless, we see a breakout. But remember, if this is going to reverse, we need that the velocity score start to weaken as well. But right now, velocity score is still on the positive side. So again, not ready to pull a trigger on the upside or to the downside. So they kind of go on the shelf. Now we have seen the same thing with the pound, a strong or a sideways trade for the most part below the moving averages. So this is again not a great short until it really breaks the support area. So I think this is definitely has less range to trade with, where we have seen more ranges in other currencies. But again, same kind of strategy here, looking to sell on the rallies. So let's go into other growth currencies. I mean, I was definitely excited for CAD to have that breakout. But again, look at that. CAD is just kind of going sideways here. So is the CAD is broken down or fallen back into the range? I think it's right at the resistance point. So if this continues to hold like this, remember, we can see one of the other case scenarios. Either it can fall right back below, or it's doing the same thing as what we've seen with the US dollar, where it did jump up, it went sideways for a few days, and then we got another move up. So always keep that in mind if that's what's really playing out here. But right now, it's kind of stuck in the middle here. That's why the trend score is a 0, and even velocity score is a 0 as well. So if you don't have a good trending score, at least we need a good velocity score to really capture that movement that we're getting on that day-to-day basis. But when you get the sideways move, it's better to kind of leave it alone. Now, this is where we have seen a lot more chop. I mean, the Australian dollar. You can see that on early this week, we had a 2-part week where it started off on a stronger side, but then look at the last 3 days, it's been on the weaker side. But at the end of the day, this is not going anywhere, and this is just testing that prior support, prior resistance, which is now the support area. So I think you have to kind of look at Australian dollar the same way. It's range bound, it's not really trending, and that's where pay attention to the velocity score. Right now it's just a +1, but my strategy is really to sell on those rallies. I'm still the trade that I'm kind of going into next week. Now, lastly, we have the Kiwi that's actually weakening further. I mean, is this a confirmation for a breakdown? Well, it does look like it's holding on to the losses here. Look at the trending score. It's also a -1 to a -2 as well. So overall, I do like Kiwi more to the downside. Remember, Kiwi had a spectacular move from October till mid-December. And after that, this has gone sideways. So we're talking about consolidation phases that are lasting for at least a couple of months or even longer. So right now, if these breaks are happening, we want to follow that. So which means if there's any sort of bear rallies that I want to kind of short into. If this jumps right back into the range, then again, I think then we are back within that range. Maybe waiting for, but maybe then at that point, we'll just continue to trade this range here. So we need to, once we get that break, we need to hold at that level in order to get a continuation pattern. So trend scores, like I said, is not where we want to, is where we're getting a big movement. It's not the time to be extremely bullish or extremely bearish or anything. It's good time to be in the middle and really look at the velocity scores. And if you look at the velocity score, trending score is right in the middle here. This is where it's definitely more exciting when you see anything at a +2 or a +3 or a -2 or a -3. But we are not really seeing that. But as far as the velocity goes, so far in the last 24 hours, we don't have that big velocity. Again, these are the times when I like to, keep the powder dry, take profits early, because you just don't know if there's going to be any sort of continuation. So this is a good time to be a bit more skeptic and kind of look for the opportunities in the middle, where it might be just a shorter term opportunity, but not really sticking to any sort of direction for the long term. So let's actually talk about possible trades ahead and take a look at what's really jumping out for us as far as the technicals goes. So let's just start with some of these dollar crosses, because I think that was a big focus. If you look at the dollar is actually moving nicely to the upside. Even the DXY is, you can see it's kind of gone above the 20 to 50. So again, if you see a pullback like the way we are seeing it today, is that an opportunity to kind of go short, or is that an opportunity to buy? And I think that's what you really want to look at. All this movements here, throughout this time, all the rallies were sold. So you have to really look at that and then do a reverse psychology there. Say, well, the pattern looks a little bit more bullish, but we're getting a pullback here. I think those pullbacks could be, again, a nice little long opportunity. One of the other things that you have to really keep in mind is that the markets are really at the odds with each other. If you take a look at what the yields are doing, let's take a look at what the 10-year yields are doing. You can see the 10-year yields actually, been on a rising for the last few days. And so far, the yields are rising. If you look at the bonds like TLT, for the, if you can look at the TLT, you can see that they kind of fallen below the 20 to 50. So right now, there's this tug of war that's been taking place where, traders were expecting rate cuts in the second half of 2023, and they have been kind of stacking that position up. But right now, as you can see, that thing is kind of fading away because numbers are strong. everything looks still fine, which means that the Fed can still stay on that course to fight inflation. So I think that if that's the case, that you want to be on the right side of that move, which is really the long the dollar, and be careful for the markets on the short side or on the long side. I think this is going to really keep a lid on the equity markets as well. So, take a look at that. Markets are kind of fighting this move here. We did pull back and then having a nice little rally. But again, the question is, are these rallies are good shorting opportunities? And if the momentum is weakening, notice that the momentum is now weakening, where we are seeing these moving averages kind of moving lower here. So I think at this point, if I see a little rally here, those are good short-term opportunities. So I'm pretty clear on how I'm approaching this markets. You have to be very cautiously bullish, but then again, there's definitely a more risk for sort of markets to pull back further and dollar to even strengthen further. Right now, this could be a range where dollar can resume its uptrend. So it could be a nice little buying opportunity. That's what we have seen so far in the past few days, where bullbacks have been bought out. So if that's the case, what do we want to pair with? So the only good scoring that we had was on Kiwi and on yen. So let's take the Kiwi dollar. So Kiwi dollar on a daily chart, you can see that it's just sitting right at the support here. If it does break the support, which is right around that 62 area, let's just say the 62 is the support that we set this week. If it gives up this area, as you can see, there's definitely a lot more room for the Kiwi dollar to fall. Let's go on a weekly chart. What do you see on a weekly chart? You can see that we did pull back, rally, and we just failed that rally. So at this point, there could be a more risk for this Kiwi dollar to kind of fall further, especially if the Kiwi or if the dollar stays strong and Kiwi continues to weaken. Now, the other one was the dollar yen. And this was, again, a great currency pair to be long at. You can see we actually broke above this 132 area and almost went up to 135 before pulling back. So all these rallies seems like could be just a good sort of buying opportunity here. So if you look at the pattern overall, there have been times where it looks like it's pulling back, but again, all these pullbacks were kind of bought out. So next week, I think we'll probably see a resumption of that trade. Now, I know I have other traders that were asking about euro dollar. Again, if I go into next week and let's say if the euro is hitting the top of the resistance, I would rather take a look at some of the euro short as well. In that case, look at euro dollar daily chart. The 20-day average is moving lower. We have the 50s just kind of holding here. Again, a lot of messy price action, but I would love to kind of see some sort of rallies to really short into. So that's another pair or another pattern that I'll be looking into next week as well. And you can see that as you go back in time, there's definitely room for this to fall. We have come quite a ways since October and November. And if the numbers continues to stay strong and the inflation continues to be an issue, again, I think you don't want to fight the Fed, which is very clear that they're looking to control that inflation. And I know I've talked to a lot of traders where, you don't feel like inflation is really going down. You only feel like either just staying or maybe it's going up in certain parts of the economy. And I think that's really where we are. So you want to be careful about this whole trade here. And again, looking at confirmations, look at gold. Look at the breakdown that's taken place in the last few days. So things that were holding, that were showing that maybe dollar has more pullback, those things have reversed. Gold has now pulled back quite below the 20 to 50-day moving average. So the outlook seems like it's supporting a bit more on the long side for the dollar. But at the same time, you want to make sure that you're not being too aggressive. Unlike last year, this is still in the early phase. So maybe we're just seeing mild bullishness. So that's why we really like this buying it on pullbacks rather than looking for breakouts. You want to look at breakouts when the price action is very, very strong. If you take a look at the equity the dollar last year, let's take a look at DXY. As you can see what I'm talking about, last year there was no big pullbacks. The price action was very strong. So every time it pulled back or every time it based, it just rallied very fast. So right now we don't have that aggressiveness. There's a lot of overhead resistance. So this is why this is going to be a slow pace higher until it gets out of the zone, and that's where it has a much more of a room for this to rally. So this is probably working at a bit of a slower pace than we like. So I think that's where we are in the markets, and timing wise, again, who knows? But what we can do is respond to the market conditions that we are currently in and just focus on that and use the right strategy for that market condition. This is, like I said, it's more range bound. We'll treat it like a range bound. When it goes directional, we'll be more directional on that. So that's the that's the outlook here. Again, looking into next week, like I said, it's a holiday shortened week, but also make sure that you're not trading at dull times in the markets. The equities markets will resume or be back open on Tuesday. I think that's where we'll see more pickup in activity. So overall, range bound conditions till things change. Focus on volatility and what currencies in play. I mean, if you really take a look at some currencies right now and some pairings right now, they're just not going anywhere. So it's better to kind of focus on what's moving right now. Dollar crosses are moving, and so is the yen crosses. So let's focus on that, and also make sure you're following on relative strong weakness and staying with it. So that's the plan. Have a great long weekend ahead. If you have any questions, always reach out. Otherwise, we'll see you guys next week. Cheers.